do want to once again just thank you all for coming for yet another edition of our Mason Means Business webinar series. This is going to be the last one for a little bit. We're going to take a little break. Kind of season one is ending up, and I think it's ending on an extremely high note. This is one that I've been looking forward to quite some time. Just conversations with friends in the industry and a lack of confusion around what the different federal programs, what the latest environment means for their organizations, and how they should be dealing with the tax situations for their companies, how they should be dealing with the financial books of their companies. So we have a great group of panelists that will be speaking with you today. We'll get into this in a real quick moment, but just want to provide a little bit of an introduction or overview about what we're going to be doing. Once again, my name is Brett Josephson. I'm an associate professor of marketing in the School of Business at George Mason University, and I'm the director of executive development. Our moderator today is going to be Christine Landahl, who's the director of business engagement and a professor of practice in the School of Business. Three unbelievable panelists. I'm going to ask them to introduce themselves on the next slide. Stephen Lawson, who's at Baker Tilly, Lena Ivanova, who's at Deloitte, and Jennifer Eubanks, who's at the CPA department. For those of you who are in the audience, we're going to have relatively a free-flowing conversation between the panelists, and we do encourage you to ask questions of the panelists. Both Christine and myself will try to moderate the questions the best we can. So you have, incredibly talented and educated people, so make sure that you use either the Zoom Q&A feature or the chat feature. We'll be monitoring that throughout the webinar to make sure that your questions are being answered. So with that, I would like the panelists to provide just a very quick introduction about themselves. Stephen, let's start with you and move on.
Sure. Thanks for having me. My name is Stephen Lawson. I'm a tax partner in Baker Tilly's DC office, and I've been with the firm since 2004. Our practice specializes in closely held businesses that practice in a variety of industries, but primarily in the DC office, we focus on things you would find in the DC marketplace. So a lot of government contractors, real estate professional practices. Looking forward to the conversation today.
Great. How about Lena?
Hi, I'm Lena Ivanova. I'm a senior manager with Deloitte here in our Tyson's office, currently in my home office in Falls Church. I have been with the firm since 2006, and my area of specialization is corporate taxation, and more specifically, accounting for income taxes, ASC 740. I work with clients that range from startup corporations to multinationals, and have a soft spot for inbound companies, companies that are headquartered abroad and have their US operations. I like to work a lot with them. Looking forward to the discussion today. A lot has been going on in the last 2 months around different stimulus packages and opportunities for corporate and non-corporate entities to benefit from the tax law changes.
Great, thank you. Jennifer.
Yes, good afternoon, Jennifer Eubanks. I'm a George Mason alumni, proud of that. I also sit on the Mason School of Business board for government contracting. So I'm invested in the school, and I found CPA department in 2014, where we work with small and mid-sized businesses. We have a specialization with government contractors, nonprofits. And I'm excited to be here amongst some noteworthy peers.
Great, thank you. Before we get going on this, I just thought, a little bit of an overview. If you've been in part of our series, this slide, decided to bring it back just in terms of an overview. This is not going to be a webinar talking about the CARES Act specifically, but it is something that, I think we, benefit from getting a foundation. Obviously, the initial CARES Act, $2.3 trillion allocated by Congress to help small, medium businesses in this crisis, to help the average American. And there are a number of facets that this program was trying to instill capital and instill solvency into the marketplace, whether it was the Paycheck Protection Program, whether it was the Main Street program, whether it was the stimulus checks that went to the individuals. a significant amount of money has been allocated by Congress to help us through this pandemic. I was listening to the news this morning, and it was a senator who was saying that between the CARES Act, the potential for the HEROES Act, and then what they had done with the Fed, over $6 trillion has been mobilized right now to help America get through the current pandemic and the economic slowdown. Along with this stimulus has been a change in modifications to tax laws and tax credits, which is something that I'm really excited to hear this group talk about, as it is not an expertise of mine. And so it's one that I'm really looking forward to learn different angles from. Once again, there are a lot of different ways that these funding vehicles were designed to help firms. And so what I think is really interesting, building off one of our last series that looked at the financial lending side, is now bring in the expert CPAs, the expert tax accountants, to be able to tell us, what's the real implications of this program, of the different programs on the firm and their financial setting moving forward. And so with that, I want to turn it over to Christine to provide a little bit of foundation and to start the conversation.
Terrific. And I will echo what Brett said with regards to the attendees out there. Do ask questions. Obviously, we want to and have great expertise from a large company focus down to smaller size. And they have seen and experienced a lot. And so a lot of my questions are going to be around, how can you be most effective in your companies and with what you're doing with a very dynamic situation that we are all going through kind of for the first time. So I too am excited to hear what the group has to say. And I'm going to start with a softball question out there with regards to really what are some lessons that you guys have each learned with regards to the corporate tax stimulus that's been out there, and what should the audience be thinking about from that perspective. So Lena, we'll start with you from what you see at Deloitte, big company perspective.
Sure. I think if we're talking about lessons, or maybe the united point here is that all these different pieces of the stimulus package, the point is to get cash in the hands of the corporation. The point is or the smaller entities, smaller businesses, and help them stay afloat in these difficult times. And whether that's through one of the loan programs, whether through the credits that are available, specifically the employment retention credit, or whether through various planning opportunities, NOL carrybacks, quick refund claims. The idea is that there are different avenues to generate cash that will help businesses to either keep people on their employees on payroll and just stay afloat for, kind of bridge the gap while things slowly go back to normal.
Excellent. And I'll probably have you dive a little bit deeper into some of those as we go forward, because I know that there's a lot of embedded opportunities in each of those statements that you stated. But we'll shift over, Stephen, from your perspective and what you've seen at Baker Tilly.
Yeah, I think what I've seen the most is that, you look at the CARES package as the collective provision changes to the tax picture of a lot of companies, and keep in mind that a change you make over here may impact a different part of the provisions of the CARES Act. So when I think of the CARES Act, you almost have to go back 30 months to TCJA. And what happened in TCJA was a bunch of revenue raisers, limitations to interest deductions, limitations to NOL carrybacks, things of that nature. And the CARES Act, in a short, brief time, in just a matter of weeks, reversed a lot of those TCJA changes. So, from my perspective, what I've seen is you can't think of this, you can't attack CARES in a silo. You have to think of it globally and how that's going to impact not only the business, but maybe the owners and the employees, and take a global picture of CARES and how that may impact a business. So from my perspective, it's really, it was a quick bill and made a lot of changes to things that we just learned about in TCJA, and we're still waiting on guidance, and there's a lot of holes that need to be filled by Treasury.
Terrific. All right, Jennifer, from your perspective.
You know, we're talking to our clients every day, and they're in the trenches trying to deal with the cash flow issues amidst a lot of uncertainty. And so what we're really trying to instill is some thoughtful planning, be nimble, be flexible, know that you don't know all the answers, know that we don't know how much PPP will be forgiven. For instance, we're still waiting on some guidance on whether there'll be changes. And so, you know, think about the opportunities coming down the pike regarding the net operating losses, for instance. And so we're just trying to be flexible for the most part, do a lot of planning, what if planning.
And how can, so as we start to kind of dive a little bit deeper, when you think about things like the NOL carrybacks, or even some of the challenges that are coming up with regards to Nexus, and what is this going to do when we've got people working from home from everywhere, because some people are not working in their state of, you know, where they would go to the office because they're with relatives elsewhere and all that kind of good stuff. How can companies really attack the planning today for something that's going to be a tax implication in 2021? So what do I need to be doing now as I'm going forward to get myself ready and to make sure I'm prepared in this agile world? So, you know, how can I be prepared and flexible from that perspective? So would appreciate your thoughts with regards to what companies should be really doing from a record keeping perspective and to help them start to plan.
I can probably chime in because it's true that a lot of those changes are from an income tax perspective, at least federal or state income tax perspective, are not going to be reflected on a tax return until 2020, which will be filed in 2021. I think that's a reference that you're making, and you know, Nexus is not going to be relevant from a tax return perspective. But let's think about all the companies that have audited financials. So from an ASC 740 perspective, for companies that file quarterly, this was a Q1 event. So there was a lot of consideration that had to be given. Granted, Q1 was pretty small because it was only 3 days. But companies that are filing their quarterly financials, they didn't need to do the income tax accounting right now and consider what, if any, of the implications of the act will have impact on their tax return and their financials. And that's when you start looking into the various opportunities, and some of them relate to payroll taxes or the loans, so that's not necessarily income tax, right? But they still have to be disclosed on financials. Others are related to the federal or state income taxes, and then there is opportunity for so many method changes as a result of the CARES Act. Some of those could be reflected on the financials, others cannot, depending on whether it's a permissible or impermissible method. So my recommendation would be to understand how the CARES Act impact the specific fact pattern of each of the entity. You mentioned something about record keeping. That's going to be key, especially in the area of employment retention credit, because the credit is available basically for wages as back at this point is 2.5 months, starting on March 13th. It's one thing to be doing the analysis at this point when you only have to go back 2 months. It's right. One thing if you defer another 2 months, and it's getting more difficult to kind of recreate the past. So it's more of a holistic approach and looking at how the act impacts that company as a whole. And also considering that the guidance, I mean, there were a few weeks in like late March to early April where literally guidance was coming up every day, some of it contradictory to what was issued before. And then the guidance is constantly being updated. The FAQs for the retention credit were not published until probably 2 weeks ago. And then I think last week or the week before, we were able to see the draft of the HEROES Act, or potentially the next step in the stimulus package, which could open, different opportunities or change a lot of the current ones. So just stay on top of the current environment and the current developments, and understand how they impact your company from all angles, not only income tax, but payroll tax or loan and sort of like a all-rounded approach.
Excellent. And, you know, Stephen or Jennifer, I'd love to get your thoughts and perspective, because I know, you know, from an overall perspective, over communication is huge. And I would say over discussion is probably even more important from the perspective of making sure you're reaching out to experts, making sure you're staying connected to these changing laws. So what are some of the things you're doing to help your clients out during this phase?
Sure. So, you know, we're having a lot of conversations with our clients about, in particular, the NOL, right? So there are current situations where we have clients who can amend today from prior years and see an impact sooner than waiting till 2021. So for those clients, you know, it's a very timely time with all this other uncertainty. This is an action we can take. So that's helpful. So planning is definitely good. The payroll bureaus are phenomenal. They've done a great job trying to collate data. And so we're making sure that clients are paying attention to that, because they're going to be really helpful down the road when we are trying to collect this data looking backwards. They've done a good job. So those are some of the conversations we're having.
Excellent.
Yeah,
Stephen, how about you?
and I'll just reiterate, I think that the communication piece of this is key. I think for the past 8 to 10 weeks, I've been on more Zoom calls and telephone conference calls with clients, just talking about what ifs, how are things going, checking in. Obviously, a lot of the news and conversations have been around the PPP loan program and what does that mean for me? And then there was discussions about giving the money back and how does that work? And, you know, so there's been a lot of conversations about a lot of things, and I think that you know, communications with your accounting team and your tax team are key. Identifying situations where, you know, maybe the work from home order has opened up and people can come back to the office, but you don't want your people to come back to the office. And what does that mean? And I think that, you know, from the state, from your question, Christine, about the state and local, I think, you know, what I've seen, about only six of the jurisdictions have really opined on whether or not Nexus would be created by having people working in their state during the pandemic. And most of the states will probably won't hear anything from, or if we do hear anything from, it's probably too late to collect data for. So I think having those conversations today with your tax preparer and your tax team are going to be key into you know, manipulating the data and and being able to file accurate tax returns, you know, in 2021. You know, with the NOL carrybacks, there's so much that can go into an NOL that, you know, even impacted by CARES, that, you know, that you may not have even thought of. The 163J interest limitations all got changed. So, you know, you may have not had an interest, you know, NOL in 2018, but now you may have that because of the interest deduction. So there's so many things to think of that we're doing that work today. So there's no surprises when shovel hits the dirt to file tax returns.
Excellent. And I know there's technologies out there that are starting to help companies and stuff. It would be interesting to see what have been some of the surprises that you've seen in talking to your clients holistically. So some things that, you know, could be lessons learned for, you know, those in the audience with regards to experiences that you've had with specific, client discussions that you've been surprised that they haven't been focused on, or what have you. So what are some things that have surprised you in this very dynamic environment? Lena, do you want to talk about that? Anything that you've kind of seen that you want to make sure that our audience is focused on?
Yeah, maybe the first area was the possibility to defer payroll taxes, the employer portion of FICA taxes that companies can defer starting from March until the end of the year, and then that they basically keep it in a payable, and it's to be paid, half of it by the end of 2021, half of it by the end of 2022. So that's basically that was the first opportunity to get cash in hand right there, and all you had to do is contact your payroll processor. And I was surprised initially how some of my clients didn't realize that this is an opportunity for everybody. so they weren't doing it. So that was number one. And then number two, what I'm seeing and still seeing is a lot of companies still have uncertainty on whether or not they qualify for the employment retention credit. For some businesses, the initial reaction was, well, that doesn't apply to us. And then we start asking probing questions to get to their specific fact pattern, and we find out that there's actually, it may be an isolated area, a small group of employees, but that there's still opportunity to claim the credit. So those have been probably the two most common ones that I've seen in the last few months.
Excellent. Jennifer, anything to add to that?
No, I would just echo. Also, we are seeing the failure of clients to take advantage of that deferral of the payroll tax. There's been so much focus on the PPP and the EIDL loans. I think it's really distracted from some of the other opportunities.
Yeah.
Excellent. Stephen, anything to layer on?
Yeah, I think that I've noticed that a lot of my clients are focused on the PPP loan forgiveness and how to maximize that, and going through the headache of these constantly changing rules and trying to fit their situation into maximizing that loan forgiveness. And I think that they're spending so much time on the loan forgiveness, they forget, okay, I have to run a business too, or I have to do other things to keep the business moving, that they lose focus. And the PPP loan forgiveness is one small, it's one big piece of legislation that gets the most press out of the CARES Act. And I think that there's so much more in there that can be unlocked for people that they are missing. And with the PPP loan forgiveness, there's stimulus 4 that's in the works right now that may end up extending the loan forgiveness period. So, you can't predict the future. So I just, encourage my clients to, use the PPP loans for the correct things, and the math and the expectations will work out the right way. So that's kind of the biggest lesson that I've learned over the past, 4 weeks or so about the PPP loans.
Excellent. And I'm noticing as well some of the challenges with regards to should I apply for these things, and what is the reputational risk on myself? You guys have any thoughts or perspective with regards to kind of that ethical overlay or discussion with regards to what should I take advantage of, what should I not to, what is smart business practices? Curious your guys' thoughts on that.
I've had few clients that took the loan for good reasons. They qualified, they took the loan, and then when the negative publicity started coming out and the news and the daily negative news, they reconsidered and returned the loan because they didn't want to be tarnished. And even though the intent of that particular company was perfectly good, they didn't want to be bucketed in the same sort of general bucket of other companies that were perceived negatively. And it's interesting that there's some sort of that negative publicity around the loan. We haven't seen the same with the credit, maybe because it's labeled employment retention credit. So clearly the idea behind is to keep people on payroll. So I haven't seen the same yet with the credit, but there's definitely a little bit of hesitation when it comes to the loans. I don't know, Jennifer and Stephen, if you've seen similar pattern.
Yeah, I think I've seen a similar pattern. I think that the news around the initial PPP loan amounts being used up so quickly kind of rushed everybody that could go to the bank and ask for a PPP loan. And I think that people didn't take a real hard look if they had been significantly impacted by the pandemic. I've had a few clients decide to return the funds. I've had other clients decide not to. But what I'm finding is that even the ones that return the funds, there's opportunities with the employee retention credit and other programs that are really helpful that are worth exploring. So I think part of it was the perception that the loan funds were going to run out. So I think people just kind of ran to the front of the line, and then, you know, once more guidance came out and more publicity came out, that people started backing off a little bit on it.
We've had the same, and we've had some discussion where clients struggle with, yes, I've been impacted, but I have cash reserves. So should I access the cash since it's limited, or should I leave it for, you know, a restaurant business or someone in retail who might be at risk of shutting their doors if I take this money and they don't get it? And so it's interesting to see people come to the table with those perspectives. Everybody's making their own decisions. But likewise, like Stephen, we're working with those individuals and their businesses to look at the other opportunities on the table, right? The credits and so forth. So there's lots of opportunity. That's, you know, we're very thankful for that.
Excellent. So it would be great to dive a little bit deeper. So, you know, as you kind of give thoughts to clients with regards to things to consider, where do you see the most opportunity? And I know every situation is different and it's hard to give kind of high level guidance, but in terms of direction for somebody to take, if they're sitting on this call going, you know, I'm in the midst of this, and oftentimes that clouds your ability to think, you know, rationally, because you're thinking emotionally in terms of how do I stay afloat and all that. Talk about some of the discussions you've had to help your clients through this. So what are some of the things that you've helped guide them towards and to in this process?
I would say that definitely employment retention credit is one of the areas. And then the second area, which is probably even bigger, is the various opportunities for tax method changes that can be filed with the 2018 tax return, which needs to be filed by October this year, that can create cash refund opportunities. So the big change with the tax reform, the TCJA Act from a few years ago, was that federal tax losses could no longer be carried back. They can only be carried forward. And they had all losses generated after December 31st, 2017 have indefinite carry forward period. Well, the CARES Act temporarily changed that rule, allowing for a carryback and a carryback 5 years. So that is a unique opportunity to carry back 2018 or 2019 losses, where the federal tax rate is 1% to back to a tax year where the tax rate is 35%. So the rate arbitrage there is a permanent benefit that a lot of my clients are looking into opportunities to, if they don't naturally have that tax loss, what tax accounting method changes they can do with their 19 tax return to get to the loss and carry it back. And I think as a tax professional, now we get excited when there's an opportunity for planning and then method changes. There's a lot going on, even with depreciation. A big one that it's almost like, oh, I can't believe the IRS let us do that. But the depreciable life of leasehold improvements was kind of one of the unintended errors, or something that was overlooked with the TCJA, and basically that class of property did not qualify for extra depreciation, what we call bonus depreciation. Well, the CARES Act fixes that. And from a tax planning perspective, now there is an opportunity to kind of leave your 18 return where you didn't take bonus as is, because a lot of my clients that have international presence, the BEAT tax becomes an issue. So not claiming bonus in 18 is better for BEAT tax purposes. So you can leave that as is. That was the planning for 18. But then in 19, you can file a method change and claim that bonus in 19 to actually drive your 19 taxable income to a loss. It's almost too good to be true, but it's an opportunity under the current tax law, and that's something that a lot of my clients are looking into, because again, they're trying to evaluate their current methods and evaluate the opportunity to generate that loss to carry back.
Terrific.
Yeah, I think we're doing something similar in our office. We've run queries for our tax software of all the 18 and 19 returns that prepared, and kind of hitting some key points on these limitations that were modified under CARES. the interest limitations, the depreciation, all those things that may have impacted taxable income reported on the 19 or 18 tax returns. And then we're thinking through with our clients how we want to implement those changes to reduce taxable income and maybe take a loss in 18 that can be carried back to 2013, where the tax rate was 35%. So we're kind of taking a two-step approach to this, where one, identifying where maybe taxable income was, the tax laws changed and taxable income cannot be reduced, and then two, how do we monetize those the most efficient way for our clients? Amending returns might be a nice thing. Filing quick claims for carryback, maybe the correct thing to do. Filing 3115s and accounting method changes in the current year may be the correct thing to do. So, to Christine, your earlier point, where every taxpayer is different, that's very much the case. And we just try to reiterate, you have to model these things out because everyone is different. Everyone has a different tax picture, and just working with your tax advisor to do that. So that's kind of the approach we've taken in our office.
Excellent.
Yeah.
And I love the proactivity approach from the perspective of, really having those conversations and ensuring you're doing that now, because you want to take it, advantage of the opportunities that are in existence, and just be aware, so that you can plan, both from a securing cash perspective, but then also long-term, perspective, what is the philosophy of our company, et cetera. Jennifer, anything
Sure.
to add on from that perspective to what Lena and Stephen have said?
Right. And we're really doing similar things, aggressively looking for opportunities to take advantage of the changes. The only thing I would add is, and I know we're probably all doing this, we're looking forward too, right? So we've got to look backwards at those opportunities, but then what's coming down the pike that might change the situation next year or the year after. And so we have to weigh that as well in our planning.
Yeah.
Excellent.
And that's a hard piece to do because there's a lot of uncertainty in the future, and
Right.
And as we saw in 2017, the tax laws can change really quickly, and so I think that makes the whole planning thing a lot more challenging for business owners. So.
Excellent. And this is going to be kind of a big picture perspective. So I know, some of you come from very big firms that have a lot of resources in terms of keeping up with changes and those types of things. But, what can the folks who've attended this call, what can they do to keep up? Where are good resources to go to and obviously reaching out to an expert is certainly there. But, I often like to make sure I'm educated myself so that I can have a thoughtful conversation with somebody. So depending on where people are, what are some resources that you guys find particularly helpful in terms of keeping up in this very dynamically changing world?
Boy.
Yeah. Good luck, right?
We're right. I mean, where we go to keep up are probably, our professional organizations and Tax Foundation, and some organizations that business owners may not want to dive into at that level. So we're all, I think, communicating from our offices out, but the others might have some other ideas. We're certainly blogging and trying to get the word out.
I think the AICPA has been doing a really good job pushing things out. As much as we knock on the IRS as tax professionals, they've actually pushed out a lot of information pretty quickly. I mean, 94 FAQs about the employee retention credit. So, I mean, there's information out there on the web. Just be careful in the source. But I think, Treasury's done a decent job pushing out alerts and, procedures. AICPA has been great. I personally, our firm has, thought leadership material going out constantly. I know all of the other firms do too. I try to follow everything that I can. I try to avoid the news as much as possible, only because there's so much out there on the news, and it tends to be negative. But I like to look at the positive things. So, I think I use a combination of resources between the AICPA, Virginia Society of CPAs has been great. DCIBA has been great. Industry organizations have been, pretty good about keeping up with impact on their particular industry. So I think those kind of things have been my main focus.
Excellent. And kind of speaking of industry things, are there uniquenesses, and this is more of a question I have kind of myself, are there uniquenesses in industries or things that people should watch out for? And again, I will throw out to the participants to certainly ask questions because we want to make sure that you're getting your personal questions answered. But are there industry nuances that you're seeing from this perspective that people should be focused on?
I mean, definitely. One of the first effects of the pandemic in late March was, the airline and the hospitality industry going through layoffs and furloughs. So that was a scary time because I felt every time I watch the news, it's another how many thousand of employees lost their jobs. So there's definitely certain industries that were more impacted than others. The essential businesses, right, who were allowed to remain and operate in some capacity or full capacity even they are impacted in a way. It's different across the board. It's not, I don't think it's like a clear cut or it's one advice sort of like fits all. It definitely have to take into consideration the specifics of sort of the environment that the business operates. I can also tell you that some of my clients are having their best time ever, especially software companies. I have some companies that are working in creating anti-phishing software or viruses and whatnot. They're saying that they're having the best time ever because apparently in pandemic times there's a lot of phishing going on and that someone has to fight it. So their revenue is through the roof. So there's sort of like the opposite side where some businesses are not impacted negatively just because of the specific of what they do and the services that they provide.
Excellent. Terrific.
Yeah, I would agree with that. I think that, what I've seen is the industries or the clients that I have that are impacted the most by the industry, by the pandemic, have, the ones that were aggressive to make decisions early on, if they're going to furlough people, if they're going to, if they're going to go after the PPP loan, if they're going to do, whatever the game plan is, the ones that were aggressive at, early on are really optimistic on where things are going to go. And I think that, people, the way things were isn't going to be the way things are going to be, even if things do open up fully. So I think the business leaders that I've worked with and had the privilege to work with are really thinking outside the box of what business is going to look like, even when, things start opening up. So that's kind of been my perspective on things.
Great.
Yeah.
And yeah, anything to add, Jennifer? You?
No, and just that speaks to the, being flexible and doing your what if scenarios and try to move, quickly. Yep. All
Perfect.
true.
Yeah.
Yeah.
So I know, Stephen, you mentioned earlier, just with regards to one of the elements is both the optimistic piece and trying to focus on the positive, but then also the importance of really focusing on the business holistically. And obviously, tax is a lever in a business, tax is an area of focus. But what would be some of the things that you are having in terms of conversations with your clients to make sure that they're stepping back and thinking holistically about what's going on? Because everything else in an organization and, from the overall ecosystem. So talk a little bit more about
Sure.
that. Yeah.
Yeah, and maybe I'll give you an example. I had I was on a call late last week with a very mature company, probably did between $300-400 million in revenue, pretty stable business, and their revenues were slashed 70% in the first month, and their owners, the owners and the executive team realized that even if the economy were to fully open, they're still never going to be back to the level that they were. And, the conversation that we were involved with them is, having those hard conversations. You don't need a sales team to sell $100 million worth of, revenue versus $300 million. And I think when you step back and put together and think about cash flow, not only in the short term but long term, I think you can do yourselves set yourself up for success, in the future. I think of and not to go back to the PPP loan, but I think that what people are deciding right now is they're struggling using all the funds because they furloughed people. Well, I kind of view that 8-week period for the PPP loans is really to give business owners a decision, a timeline of decisions about what their business is going to look like after the pandemic. And so, we're having a lot of those conversations with, tough conversations with business owners, and sometimes people just need to talk out loud and think about it out loud, and we've been part of those conversations, just listening to them as their trusted advisor for their business.
Excellent. Lena or Jennifer, anything to add from that perspective of having that broader conversation?
I think the key is that, and it was kind of alluded early in the conversation too, that it's not just one aspect of the business that is impacted or 1 year of a tax return, right? The carryback impacts the 5 past years, and then you have to consider what's coming in the future, what is the plan for the business, and kind of look at from all angles. It's not the time to make a decision very narrow-mindedly and sort of like in a vacuum. You have to look at all angles.
Yeah, it's important. And one thing that I'm finding, and it'd be interesting to see what you're seeing kind of in your space, but is the focus on being very innovative and thinking of things differently. So, in terms of, Stephen, to your point with regards to, what sales team do you need for, X, of sales versus a new Y, which is much lower than that, is redeploying assets and redeploying people to different things and doing unique elements. Are you seeing innovative things, favorable impact from a tax perspective or what have you? Have you guys seen some unique things?
I missed your question, Christine. You froze on me. Sorry.
Oh, did I? Sorry.
Yeah.
And I have
Sorry.
dogs barking in the background. Can you hear me now? Okay.
Yes. Yeah.
Okay.
Yeah. Sorry.
Yeah, no worries. So the question I was asking is with regards to innovation in your space. So I've seen a lot of innovation holistically at the corporate level with regards to redeploying assets to different areas and all that. What would be some innovative things that you're seeing companies do within the tax space to help them address, viability down the road and that type of thing? What are some things that are potentially creative or different or unique that you guys are seeing in your space that your clients have done?
I think that I've seen a lot of investments, at least from a tax perspective, in data manipulation and how to extrapolate information from clients' books and records, and when you get the good data, you can make good decisions, I feel like. So, we've to an extent, the compliance work has been more of a risk mitigation proposition for us, and we really look for opportunities to manipulate data, identify opportunities that are, with changing tax law like the CARES Act, and be proactive with our clients. And as far as innovation technology, we've started to streamline the connectivity between a client's accounting system and how we report things on tax returns. So that's kind of what we've seen. I don't know if anybody else has seen anything differently.
I have an example, not necessarily that creates tax innovation, but just an example of resilience and innovation in general. One of my clients who had to shut down, they had to shut down their factory, but a few weeks later brought back some of their employees, and they started making face masks. It's a company that makes custom frames, and instead of cutting the plexiglass from the frame, they started cutting it for a face mask that they distributed to hospitals. So that's it was just so refreshing to see how businesses found a way to be contributing back to society, and you know, we can't do what we normally do, but we can still be helpful. So that was very empowering.
Excellent.
Yeah, same here. I'm not seeing a lot on the tax front, but I'm seeing very resilient clients where, you know, a local brewery started making hand sanitizer, right? And one of my clients who sells furniture, office furniture, well, his business was decimated, right? Retail. But they moved online very quickly. It was something they were doing slowly that they accelerated. So I think businesses are simply trying as best they can to be nimble, right, and shift and stay in business through this period of time, be resilient.
Excellent. Perfect. We only have a few minutes left in the webinar and stuff. So I'm going to ask this question kind of each of you with regards to what have we not shared in the last 45 minutes that you think would be extremely impactful for those who are attending to think about and to do. And I know we've talked about the importance of cash and getting cash out, and that there's various vehicles to do that. We've talked about looking at your business holistically and thinking about it not in a silo with regards to just a given tax year, but the implications both with the 5-year carryback and the go forward kind of positioning. But what would be your key element to say to the folks on this webinar with regards to things that they should be doing in this space to really stay competitive and to ensure that they're doing the best that they can from an overall execution in this financial side of the house? And Stephen, I'll start with you, and then yeah.
Sure. Yeah, I think there's two things that come to mind. The first one is kind of goes under the header of leave no stone unturned. So, you know, the CARES Act has a lot of good stuff in it, but there's planning opportunities that for tax savings that are available before the CARES Act. There's R&D credits that are available that a lot of people think I'm not an R&D company. I don't develop, you know, new fancy technology. I'm not a lab. But you know, when you look at, you know, the qualifications for it, it meets a lot of companies do some R&D work. So you know, leave no stone unturned. There's, you know, things in the CARES Act that are great. There's things that are, you know, not in the CARES Act that may still be applicable to you. You know, the enhancement of accounting methods is one of the big changes that may be a good fit for your company. The one thing I'm keeping my eye on a lot of is Section 165I, disaster losses. I know that the Treasury is supposed to be issuing some guidance around that, and what does that mean for our clients? You know, under the provision, you basically would be able to take a 2020 loss in 2019. So you know, there's still things to come out, and we're still anticipating stimulus 4, which may change pieces or all of stimulus 3. So we're still kind of being nimble, and I think a lot of my panelists here have echoed, you know, their ability to do that as well. So
excellent. Jennifer, anything you would say to somebody that's sitting there thinking, what should I do?
Sure. You know, I know people are definitely focused on their businesses and trying to make the best of their cash flow, right? But in the midst of that, if ever there's a year to sit down and plan, go see your tax preparer and make sure you're really doing your planning. I think above all else, that's the most critical thing to do. And the leave no stone unturned, that's great. That's absolutely true. Look backwards, look today, look forwards at the opportunities. Certainly, I think there's this net operating losses. We can't forget to look at that closely, the change there. So that's where we're focusing.
Excellent. Lena?
I would say, just in general, businesses should not make a decision without consulting with their internal tax departments, or if they don't have an internal tax department, you know, stay close to your tax advisor, because there's so much going on in tax that you don't want to be locked into a situation that could have been a more favorable one had you had that discussion profession up front. Unfortunately, oftentimes we see that decisions are being made and tax is not necessarily consulted. This is not the time to do that. I think literally about a year ago, all of us tax professionals are still catching our breath, getting used to and learning the tax law changes as a result of the TCJA. And now we have another batch coming in. So the environment is very dynamic, and you want to make sure that you stay close to your tax departments.
Excellent.
Decisions.
Yeah, and I think, to all you guys' point, to just re-echo it from the perspective of, the money that you would invest in tax planning, I would assume is going to pay dividends down the road, both in terms of, being able to either pull that cash out or think about your methods or think about all these things. And it's critical to do from that perspective, and to make sure that you're investing in yourself as a company to take advantage of a very dynamic situation. So from an overall perspective, are there certain timelines and deadlines and things that people need to focus on? Because I know there's been some movements and deadlines and all that. So what are some critical dates that folks should really be focused on, and make sure that they have these conversations with their advisors before those dates? What are some of the ones that are out there that have been modified?
So from a calendar year perspective, the companies that operate on a December 31st calendar year end, the IRS allowed for a deferral of their extension, filing an tax due that could have been due with extension that is normally due on April 15th. So now that is due on July 15th. That's again like a 2-month deferral of any potential tax liability. However, your tax return, your corporate tax return, is still due on October 15th. So those would be the next the next big deadlines. If you haven't filed your extension, July 15th is the new deadline, and then October 15th for your corporate tax return. If your company is expecting to be taxable in 2020 and you need to, or 2021, and you need to be making your estimates, the quarterly estimates are still computed quarterly, but there was a deferral of the Q1 and Q2 payments are now both due July 15. So again, a little bit of a deferral for actually paying the estimated tax. And then from an employment credit perspective, that credit is actually claimed, it's a credit against payroll tax, so it doesn't get claimed on the corporate tax return, but it's claimed on the quarterly payroll tax returns. So that is like a quarterly event. If you calculated your credit for Q2, which is about to end in a month, right? You can technically claim it on the next payroll tax return form 941 that is going to be filed. So keep an eye on that too, because you can monetize the credit quarterly. You don't have to wait until the end of the year.
Excellent. So staying on top of these things is hugely important. Well, I will, thank you guys very much. And I know Brett will do that as well. A lot of really good information. If you had any parting words for the audience, just in terms of, and I know none of us can predict the future, but what are some things that you're doing as you look out? Obviously staying current, staying up to date, doing those modelings and some of those things are hugely important and stuff. But any final words of wisdom for our attendees? And I'll just go around the horn and then I'll turn it back to Brett. But this has been great in terms of sharing your insights, but your last parting words to our attendees today.
For me, it's communication. I think that's key in any relationship with your tax advisor or professional firm. Asking those questions, communicating what you're seeing in the marketplace. I think that is my number one thing is we don't know what you know, so ask those questions and communicate what you're seeing, because that helps us make decisions or help you make decisions about where your business is going. So for me, number one, please communicate with us.
Excellent. Jennifer.
Yeah, so, there's still so many moving parts, still clarity to come. And a lot of that is going to be legislated. And so we're really asking our clients to reach out to members of Congress to have their voices heard. We're participating in groups that are going out and talking to Congress and talking about the impact of small business and advocating for legislative change to bring some clarity. And so I think that it could be very impactful if we all speak up.
Excellent. Sharing your voice. Perfect. Lena.
I would say like a common theme, I think, during this discussion has been the resilience that companies have demonstrated, as well as flexibility. So I think that would be key for all of us, honestly, to even on a daily basis in our lives to survive. Companies cannot exist without us, right? As employees or advisors, I think it comes down to resilience and flexibility.
Excellent. And we are, and you know, adaptability is huge. So thank you to each of you guys for not only providing your insights, but knowing you're doing it in a time that's very busy. So to the point of, I know there's some people out there who are bored and don't have things to do. I know you guys do not fall into that category at all. And you're on hyperdrive with regards to trying to get all this planning in and get your clients taken care of and all of that. To the audience members who have attended, thank you for your time and your energy. And you got 3 great examples of great advisors. Reach out to these guys or your own if you don't have one. You know, certainly you've got some good models and stuff to use, but a lot going on, important to stay ahead of it and abreast of all the changes. And just thank you so much for your time. And with that, Brett, I will turn it over to you to close us out today.
Great. Thank you, Christine. Once again, just thank you to the panelists for joining us this afternoon. And thank you for the attendees. A lot of you have come back for multiple webinars over these past few weeks. Said at the beginning, this is going to conclude our kind of season 1 of this. We're going to take a little break, let everybody, I know there's some Zoom fatigue of webinars, start thinking of what, what we want to do next and continue to provide you, especially the Capital Region, to the Mason community, content that is important for your businesses and for your careers. So I want to thank Christine for doing an excellent job these last couple webinars, moderating them. Thank you for the panel for taking time out of your day. We will see you all shortly. Stay safe and start enjoying this opening up of the Northern Virginia economy starting tomorrow, right? So
That's right.
We can finally go to a store.
That's right.
All right. Well, thank you very much.
Perfect. Thank you.
We'll talk to everyone soon.
Take care.
Thank you, guys.
Bye-bye.
Thanks.
Bye.